All right, guys, welcome to Dr. Chef's Crypto. This is Dr. Chef. Okay, so what we're going to do today is a little different than our normal content. It's going to be crypto-ish, but I really need to respond to a few folks and talk about general overall economics and financial concepts. You're going to understand pretty quick why. Now, obviously, I can't call this is not official financial advice, okay? I'm not an official financial advisor. We're going to call this education. This is an educational purposes. Look at, adventure into the concepts of finances, wealth building, etc. This is going to be a basic overview. You're definitely going to want to send this one to some friends. But anyway, here's why I need to make this and why people ask me these questions. We were all trained pretty much wrong, incorrectly. And the vast majority of the financial gurus in the world are using a type of training that is good for people that are struggling. But once you get past a certain stage, this advice is no longer relevant. Now, don't get me wrong. The number one person in the world is Dave Ramsey. I'm not mad at Dave Ramsey, okay? I'm not mad at anybody. And they are definitely trying to help, which is a good thing. But once you have some of that stuff done, those ideas run out. So let me explain. Well, let's just take a look. Let's just take a look at some stuff here. We'll go over here like this. Like I said, I'm not mad at Dave Ramsey, okay? Dave Ramsey's awesome. Okay, he's super famous, super wealthy, super powerful, very, very successful. Number one financial guru probably in the world. Cover of Money magazine, the debt slasher. What's all that about, right? Okay, let's just look at Dave's own information and let me explain. Here's the baby steps. This is how you're going to get into a healthy financial situation. Okay? Baby step 1, save $1,000 for your starter emergency fund. Okay. Pay off your debt except for your house. Get 3 to 6 months of expenses in a fully funded emergency fund. Invest your household income in retirement. Save for your children's college fund. Pay off your home early and build wealth and give. Now, is this in and of itself bad? Of course not. What is this for? Well, this is this. This is cutting your debt. This is eliminating debt. What is that for? Who needs to eliminate debt? So, okay, I'm trying to figure out how to say this without sounding obnoxious and weird. But the bottom line is this is for people that are not very financially savvy. They're not ahead of the curve. They're not... I don't know how to say this because I don't want to be mean because everybody was like this. I needed this when I was in my 20s. I needed this when I was younger. The problem is that a lot of people have handled this, and if they get through this in this way, our entire point is this last step, build wealth and give. The problem is they get stuck in all of this, and people are celebrating being debt-free. So celebrating being debt-free, if you are sort of a lesser privileged person or an underprivileged person or a lower income person who's struggling, that is a very important thing. And the reason is debt will overwhelm you and harm you if you don't know how to control it, if you are young or not very good at finances, the whole yelling on the Dave show about being debt-free is very important for a certain group of people. However, none of this stuff is actually going to get you wealth. It's actually going to bring you where you want to be. What it's going to do is help you be debt-free, which is amazing. And it's going to help you have a better life. That's great. Like, take step 4, investing 15% of your household income in retirement. The problem is that most of the folks who do this are going to put this money into a savings account. Okay? If we click Learn More, we've got savings accounts, right? We've got maybe some funds. We've got saving for our children's college, utilizing college savings plans after you've paid off your debts. Okay, don't get me wrong. Like I said, I'm not trying to be mean. This is very important for a very large portion of the population. This is amazing advice for people that are struggling. The last thing you want is more credit cards and more debt and overwhelming, buying a new car when you're living in a trailer and you're having all these problems. It makes all the sense in the world. However, once you start to get free of those things, this advice actually begins to backfire. We were all taught the same thing. Work hard, save money. Try to get money and put away in your savings for when you retire. Try to make a savings account for your kids' college funds. We were all taught the same stuff. And it's unfortunately dramatically incorrect. Now, it might not have been dramatically incorrect in the past, maybe in a different time and era than now, when you got a really good return on savings, when banks were different, when money was different. Maybe this was good stuff. But there's some very, very significant and immediate and obvious problems. So I'll just take you through it. Just follow along. Do your own analysis. Use your own brain. But let me just show you a couple things. Let's just go. I don't know. Let's just talk about inflation for a minute. Let's start with this. I'll just start with the definition of inflation from all the dictionaries. Here it is. It's in economics. Inflation is when prices of goods and services go up, and that makes the dollar worth less. You are spending more for everything, therefore your dollar is worth less. It's lowering the purchasing power of your money. To offset that, you're going to need more money, right? Okay, that's pretty simple. Definition of inflation corresponding to a reduction in purchasing power. All right, you got that part, right? Okay, let's look at this. Here's the inflation rate analysis from Trading Economics. United States inflation rate. Annual inflation rate accelerated to 6.8% in November of 2021. So you don't need me to read that again. I hope you understand 6.8% was the most recent figure on our annual inflation rate. The target is 2. It's usually 3 or 4. Recently, it's been 5 or 6, but right now, we are rocking a 6.8% inflation rate. All right, there it is. You can see all the data. You can go to Trading Economics if you want. Research everything. The lowest inflation we've had in forever is 1.5 to 2%. Usually, it's 4, 5, 6 recently. So keep all this in mind. This is not going down, it's going up. If this was a chart on a stock, we would call this trending upward. So this is not going anywhere, and this data right here is very, very bad. Now, even if we were at 2 or 3, let's just take a look at some information. What about this? What if we go here? Let's look at savings accounts in America. If you don't believe me, look it up, savingsaccounts.com. Greatest savings account in America? Beautiful. Marcus by Goldman Sachs. Hope you recognize this. 0.5%, 0.5% is the best one in America. As you can see, you got a 0.4 if you go with the American Express Bank, 0.45 with Citi, 0.5 with Chime. That card everybody keeps talking about how awesome it is. 0.5%. Patriot Bank 0.55, Citi 0.5. These are the best rates in America. I hope that you're understanding what I'm saying. Let's just get down to brass tacks real quick, shall we? Listen. If inflation is 1% and your savings account makes 0.5%, you're losing money. Do you understand? If inflation's 2% or 3% or 8%, which is where it's probably headed, but 6.8 this last month, and you're getting 0.5% or less, by the way, it's 0.1 at most banks. Notice how the main banks, Bank of America, Wells Fargo, etc., weren't on that list. They're rocking maybe a 0.1, maybe less. Just think about it for a second. If you have $100,000 in your savings, $100,000 in your savings, and you're getting 0.1%, and inflation is 5%, 6%. So how long does that take you? It takes you about 20 years to lose all your money. I like them apples. Okay? The point is, none of this works. This doesn't work anymore. The savings accounts don't work anymore. You can do whatever you want. Okay? You can go with the whole work really hard, put part of your paycheck away in savings. You can do all that. That's fine. But let me just explain that that is not going to work. You can do it, just like you can jump off a building without a parachute, just like you can go bungee cord jumping with a questionable company in Costa Rica. You can do whatever you want. You're a grown-up. But this work real hard savings account thing doesn't work. If you're in some kind of amazing fund, you might make a few percent. You're going to have to figure a way out of this. Now, let me show you a way out of this. We'll go back over here, and I'll just show you some things. Take a look at this. This is Binance. This is a Binance.us overview. This is one of the main sites that I recommend doing crypto with if you're trying to do a certain number of low-level cryptos. Like, I mean, I'm not talking about low-level. I'm talking about mainstream cryptos, things like, Ethereum, Bitcoin, things that everybody knows the name of. The reason I call it lower key is because there's less. This isn't the extreme stuff. This isn't the trading. This isn't the trying to make a bunch of money stuff. So Binance, this is an example of a very safe, beautiful site. And look at this. This is your holding accounts for staking various cryptos. Just take a look. All right, just take a look. Algo staking is 8 to 10%. Your minimum holding is only 2 algo. That's it. You can open this account with virtually nothing. You got 6 to 7 with XTZ. You got 6 to 9 with Atom. These are just an example of staking. What you do is you get a crypto and you put it into a site, you stake it, and you leave it. It's the same thing as a savings account. Let's go a little more wild. Let's go to something like KuCoin. Take a look at this. This is USDT. That's a tether. This is relatable to a dollar. USDT is pegged to the dollar. If you were to take 100,000 tether, $100,000, turn it into 100,000 tether, and go back 5 years later, it would be $100,000 still. Tether doesn't change. It's pegged to the dollar. So you're not going to go up and down like you would if you had other types of coins. You've seen coins go up and down. Bitcoin was 60,000. Now it's 40. And things go up and down like that, right? Tether doesn't. US dollar coins, stable coins don't. And look at the returns. 6 and 7 up to 8. And this is just right now. This is right now. This is tracking the funding market. This is for people staking their USDT, letting people get loans based on it. Like what? By the way, if you think that sounds crazy, that's exactly what the bank is doing with your money. Put your money in the bank. That money's not there. The bank uses it to invest in things. Okay. So look, you're making an average here of 8%, and this is just on KuCoin, just on Tether. You understand? Take a look. Look at this article. This is an article from CoinDesk. By the way, you go into Nexo, you get 20% APR, 20%. This is twice any investment firm in the world. It's 20 times your bank, actually 40 times more than your bank. 40 times more than your bank right here. Okay. But maybe that's, not secure enough for you. But take a look at what CoinDesk has to say. Look. Top 6 crypto passive income generators for 2021. Look. Here's a list of all of them. How to store things in your wallet. How to use proof of stake for staking. And as you can see, they're listing Cardano, Ethereum 2.0, Polkadot. You click on Ethereum 2.0, check out what you got. This is a description of that. Ethereum 2.0, this is the current price on Ethereum, right? And this is just giving you information about Ethereum, market analysis, right? And you can stake these things and you can make money. This is what this is all about. You can go read the articles and find out what's going on with these things. Look, these are ways in which you can hold money. BlockFi, Celsius, Nexo. You can hold them in accounts. You can have them in very secure areas. You can use them for lending. You can use them for staking. You can do yield farming. All of these things. Go read this article on CoinDesk, which is called Top 6 Crypto Passive Income Sources. All right. Just think about this. If this is inflation, if you don't make at least what inflation is, you're losing money. So you're going to have to figure that out, right? I like this one here. Look at this. This is Ethereum Mining. You just invest in here and you get 6.5% return rate. Okay, this is just one of the holding sites. This is on Gate.io. Like I said, I'm not mad at Dave Ramsey or any of the other gurus. Okay? I'm not mad, but you're going to have to figure something out. Look at this. This is on Exodus. Exodus is my recommended wallet. It is a very secure hot wallet that you can connect to your Trezor. If you've seen my summary video, you know that I recommend the Exodus wallet. Now take a look. This is all the assets available. There's Algorand, 4.64%. Your bank is a maximum of 0.5, probably a 0.1, and you can come on the most secure wallet site that there is and get 4.64 on Algorand. You're just leaving it here. Here's another one. Cardano's 4.91. I got quite a bit here. Just making that money. A couple thousand just sitting there making 5% instead of a savings account, right? Look at this. Cosmos. Your Atom makes 11.96, 12% for just coming here with $10,000 or $1,000 or whatever it is. You buy your Cosmos and you just have it in your wallet. That's it. Your wallet's connected to your Trezor. It's completely safe. Arguably safer than your bank, but at least as safe as your bank. Okay? You're making 12%. You like DAI. DAI's a very stable thing, and you can get it for 3.26. And there's a bunch of them. You just have to scroll down. Look at this. Ontology. It's a newer one. Sometimes when they're newer, you get more. 16.62. Look at that. Just look at that. 16.62% APY on an ontology. You're holding it. And there's Solana for 6.3. There's Tezos for 5.6. VeChain's 1.17. You understand? This is a wallet that's super secure. Same thing as your bank. You take your 10,000 out of savings where it's making 0.5% in a world of 5% interest, 5.5, 6.5. You're losing 5% right now. Okay? You put it here, make 12%, even at 6 or 7%, inflation. You're still making 6%. You're still making more. You're making twice as much as the interest on your house loan. You're doubling your money continuously, even with inflation. So this is what you have to understand. Not that you have to do these exact things, okay? Not that you have to do these exact things, but you have to understand you're going to have to come up with something. If you're going with the old system of I'm going to work really hard, I'm going to take 15% of my money or 20% of my money out of my paycheck, I'm going to put it in a savings account. I'm going to save for retirement. I'm going to try to save for my kids' college. If you're doing this, you're losing money. So if you did this for the next, let's say you had kids that were just starting school. Maybe 10, 15 years from now, they're going to try to go to college. You're trying to save money for them. If you're putting away money all the time for your kids, college fund, inflation keeps going up. Your bank account keeps making low money. You're losing 5% a year. It's compounding on itself. Maybe you end up with $20,000, $30,000, $50,000 of money saved, and maybe that money is worth $10,000. You understand? I'm just trying to help, okay? Obviously, if you're working a part-time job or you're working a minimum wage type job, you're in debt, you're in trouble, get yourself out of trouble first. Follow Dave Ramsey's advice. Get yourself some backup money. Get your debts paid off. Get rid of those credit cards. Get yourself on track. But if you have yourself on track, if you have an income that's substantial or pretty good, if you have low debt, if you know how to control your credit, if you know this stuff, then you're going to have to act differently. Debt is not your enemy unless you're poor. Even lower middle class, probably, it's your enemy. But every wealthy person in the world has staggering debt. Do you understand? Debt equals money. I'll put it to you like a mentor that I have in the financial world put it. Think about it this way. It's real simple. Let's say you had $1 million. Okay, let's say you had $1 million. You're considered, fairly rich, right? You got $1 million. What do you do with it? Most people put it in savings. And now they're losing money. They're losing 5 to 10% a year. Okay, that's out. What about, buying something with it? Okay, you buy something with it and you don't have the money anymore. Maybe you buy something that appreciates, but most of the time you don't. Most of the time you buy a car or a boat or whatever, and maybe it's not going to be worth as much as soon as you get it off the lot, right? You buy some nice clothes, buy some expensive watches, things like that. Maybe they're not worth much after that. Bad idea. Bad idea. So what are you going to do? You know what would happen if you had $1 million and you wanted to borrow $1 million? They'd give you $1 million. What would happen then? You'd have $1 million to spend. Wow. What would the payment be? Depends on your credit, depends on what you got a loan for, right? But look at this. Do you pay taxes on that? No. You pull your $1 million out, spend it on something, you pay taxes, right? You get a loan on your $1 million, you don't pay taxes. If you do your $1 million investment correctly, and you're making 20% back on your $1 million, your $1 million that you actually have, the interest is paying the loan of the $1 million. You understand? So you have your $1 million, you're spending it, you're paying that off, but you still have $1 million. You get all the stuff, you pay it off. With interest from the $1 million, you have the stuff and the $1 million. Get it? The point is, this type of frame of reference, this type of thought process is not normal. This is not how people think. This is how wealthy people think. This is how people with lots of stuff, lots of money, lots of investments, lots of properties, this is how they think. Every time they spend money, the plan is to make more money. Every time a normal person spends money, they spend it on a TV or a car or a trip or whatever they spend it on, and their plan is to spend the money that they earned. They're backing themselves up for the future by savings. This is our parents, our grandparents, all of our friends, all of our neighbors. This is what they do. They work hard, they make money, they spend it on stuff. The stuff is not worth anything. They save it in savings accounts where they're losing money. They don't have the mindset of wealth. The mindset of wealth is, I want to spend someone else's money. I want to not pay taxes and get stuff. I want to do things that are completely legal and above board, but they make financial sense on a wealth perspective, from a wealth gaining, ladder climbing perspective. You give me $1 million, I'm not going to go and spend it on stuff. I'm going to put it away at a very high rate in multiple locations, completely secure, use it as collateral loans, use the loans to buy whatever I want, pay those off with the interest from the loans, interest from the investments. I'm going to buy some things that are going up in value, like land, properties. I'm going to invest in things that are going to make money, whether it's crypto, properties, whatever. I'm only going to invest in things that make money. If I want stuff, I'll get loans for stuff because then I don't pay taxes. And then I pay the loans off with the money that I have invested in the high yield returns. You understand? And then I still have the original money that hasn't been touched. I'm just building more and more wealth. I know this is weird and counterintuitive to most people because it doesn't make sense based on what we've learned. What we were taught when we were young: work hard, get a good savings account, get good insurance, try to have a good life, save a bunch of money, retire someday. There's people all over America right now, like the majority of people, with their money in savings accounts, and they're losing right now about 5% a year, give or take. It's like they're throwing out their money. If they have $1 million in a savings account, they're burning 50 grand a year, just lighting it on fire. They could be using it to buy cars, houses, whatever they want. You know how much 50 grand is? You know how easy it is to buy a property with 50 grand? You could have a property every year. You have your $1 million from your big, 401k savings plan thing that you've been doing because you've been working your butt off for 40 years. You have that $1 million. You have it sitting in a savings account where you're losing 5% a year. You're losing 50 grand a year. You could buy a property every year, be making the additional income of all the properties, have all those properties on your balance sheet. Now you're worth $10 million. Now you get whatever you want given to you. You don't pay taxes because you're investing in things. You're not just going to sell them later and pay taxes on them. You're smarter than that. You're going to use other techniques to control all that. But there you are with your $1 million sitting in the savings account like you're totally awesome. Just losing money, like losing a property a year, losing a brand new car a year, big one, nice $50,000 car. You're losing $50,000 a year or more. Right now you're losing, as of right now, as we sit here, if you had $1 million in the bank in savings, you lost $68,000 so far this year. You lost you lost a car for for you and your spouse. You lost a massive new property, a beach home. Could have put that money down on the beach home. Yeah, you lost a beach home, a boat. You lost all kinds of stuff this year. With your $1 million, thinking you're super cool with your 800 credit score and your $1 million, and you just lost $68,000. That's an actual thing. You just did. So, I don't know. I would highly recommend doing something else. Not financial advice, not official. I'm a chef. I'm a writer. I'm not that guy. But I have a bunch of things, and I've learned a bunch of stuff. Opening businesses, studying finances. You just got to think about this stuff. You got to study inflation. You got to study your savings account. You got to go look at your bank statement and go, am I really making like 0.1%? I could make like 5% by storing it in a secure offline hard wallet. Without even thinking about it, I could make 5 times this, 50 times this. Man, I hate to say that, but if you got a 0.1% return on your, you could get 60, 70 times more interest. 60, 70 times more interest in a totally secure, easy way. And be totally in control of it. And by the way, if everybody went to get their money out of the bank, they couldn't, but you could, because your money would be in a completely different location, totally secure. All right. I didn't mean to depress you if I did. I'm not trying to do that. I'm trying to help. I'm trying to tell people what we learned, and I am the biggest victim of all, okay? What we learned about finances. In my case, we learned it from people that didn't know, and we need to get free of debt if we are having struggles. We need to not get another credit card or buy a new car if we can't pay our bills. But once you get past that and you get to that middle class, upperly mobile, headed toward upper middle class thing, you need to start thinking about what you're going to do in the future, because you don't want to lose $50,000, $60,000 a year. You don't want to lose 5-6% of whatever you have continuously. So, thank you guys for listening. I hope this was a help. I don't know. Tell your friends. Share it with somebody that has $200,000 in a savings account at a bank, and tell them they need to rethink their strategy, unless they just like losing money. All right. This is Dr. Chef for Dr. Chef's Crypto. Obviously, this was not crypto-based, but in a lot of ways it was, because a lot of the crypto staking, crypto lending, and just holding it in some of these accounts gets you 50 times what your bank's giving you in interest. So you need to look into that. But there you go. Thanks for listening. Have a fabulous night, and good luck out there. Be careful.